A super good morning and wishing you a wonderful day ahead. Good to be back after a short break. Welcome to today's episode of Morning Wealth. We'll talk about three things: flows into inflation plays pickup, chip shortage and GM earnings, and also earnings from PayPal. Stocks almost wiped out their gains as technology shares turned lower, offsetting optimism over solid corporate earnings and economic reports. Treasuries climbed. The S&P 500 notched an advance of less than 0.1%, while the Nasdaq 100 ended in the red. The Dow Jones rose to a fresh record. Recent data from the Commerce Department showed that robust growth in the first quarter returned the US economy to just below its pre-pandemic size. That acceleration can be seen in company profits as well. With about 3/4 of the S&P 500 companies having reported, earnings are projected to have grown 48% in the first quarter from a year earlier. That is a big improvement from the 16% growth analysts had predicted at the end of December. Wednesday's rally came after Treasury Secretary Janet Yellen walked back comments that interest rates might need to rise to keep the economy from overheating. She clarified that she was neither predicting nor recommending that the Federal Reserve raise rates. Inflation isn't likely to be a problem and the Fed can handle it if it does become an issue, is what she said. The 5-year break-even rate, a proxy for annual inflation rate bond traders expect over the span, jumped to the highest since 2008. But despite the increase in commodity prices and supply shortages, several Fed officials said yesterday that inflation is unlikely to get out of control. But if you look at the positioning, it gives you a different story. With rising inflation on the horizon, value funds poised to benefit are getting in billions. BlackRock's iShares MSCI US Value Factor ETF with the ticker VLUV just notched its best week of inflows on record with more than 925 million coming in. At the same time, a rival Vanguard product, the firm's 78 billion value ETF VTV, took in almost 1.5 billion, its best 5-day period since early 2019. Investors are looking to benefit from an anticipated spike in inflation that would put more emphasis on the current rather than future earnings, giving value firms a leg up on their growth counterparts. Another positioning that's happening on the same theme of inflation, short interest in the 12 billion iShares 20+ year Treasury bond ETF with the ticker TLT now clocks in at more than 25% of the shares outstanding, the highest since early 2017. This is according to data from IHS Market. The fund has slumped this year as US vaccine rollout and economic reopening boost expectations for a jump in inflation, which would eat into fixed income returns. So that's with the overall inflation positioning that's happening in the market. Moving on to some corporate action. Shares of Peloton Interactive fell 15% after the company agreed to recall its treadmills and its chief executive apologized for an initial refusal to comply with federal safety regulators. General Motors reported on Wednesday a near record operating profit for January to March period, while rival Ford a week earlier posted its best bottom line in years. Jeep maker Stellantis said sales rose 14% for the quarter and confirmed full year guidance of about 5.5 to 7.5% adjusted operating margins. But each company said the shortage of semiconductors has forced production cuts across car factories worldwide since January, will pinch production and inventories even more heading into the summer, just as American car buyers are turning out to dealerships in droves. GM won't quantify its production cuts but confirmed the chip shortage will hurt more in the second quarter. Ford pegged the fallout for the year at about 2.5 billion, while GM estimates its impact at 1.5 billion to 2 billion. The semiconductor shortage has forced Ford to reduce output for several weeks at its two plants that assemble the F-150 pickup truck, the company's bestseller and its biggest moneymaker. While on the other hand, GM's key pickup truck and big SUV factories have managed to sustain near normal schedules as of now. Overall good numbers from the automakers, but future production is dependent on the semiconductor, and how the shortage is going to get handled seems to be the main factor for how this is going to perform over the longer term. Lastly, PayPal reported the proliferation of vaccines around the world hasn't stopped people from shopping online with PayPal, which boosted its forecast for growth in new users and revenue for the year. Total payment volume in the first 3 months of the year surged a record 50% to about 285 billion, topping the 265 billion average analyst estimate, even as local governments continue to loosen restrictions throughout the quarter. The firm now expects to add as many as 55 million new users to its platform this year, an increase from an earlier guidance. Chief Executive Dan Schulman said even as stores begin to open up, as restaurants begin to open, as events begin to open, people will be paying for those things in a digital fashion. We now believe that the shift to consumer digital behavior is going to remain essentially unchanged in a post-COVID world. PayPal shares rose about 4.9% in extended trading. The payment giant now expects revenue for the full year to climb 20% to about 25.75 billion, a slight increase from the 19% jump it had previously expected. Total payments volume is likely to jump by roughly 30%. PayPal added about 14.5 million new users to its platform during the first 3 months of the year, an increase that also topped estimates. Overall revenue surged 29% to about 6.03 billion, greater than the 5.88 billion analysts were anticipating. That's the update. Stay safe and healthy, and I'll speak to you tomorrow.